Welcome back to the program. Now, Angolan banks are appealing to the government to help put together a bailout package to protect account holders as lenders reel from low oil prices that make up almost all of the nation's foreign exchange earnings. The chairman of the Association of Angolan Banks, Amilcar Silva, says financial assistance could come from the administration of President José Eduardo dos Santos or be shared by all of the Southwest African countries' 28 operational lenders. The Angolan economy, sub-Saharan Africa's third largest, has been crippled by oil prices that have halved since mid-2014, with the International Monetary Fund estimating zero growth for 2016. Those woes have knocked the banking industry, causing bad debts to soar and business to slow as the Angolan government cuts fiscal spending. Exotic Partners research analyst with headquarters based in London has upgraded its recommendation on Dangote Cement to buy from hold based on a revised target price for the 2016-2017. The research analysts have also upgraded Lafarge Africa, Dangote's main rival, from a sell to a hold based on a valuation model for 2017. So what's driving this latest ratings about these two major cement giants? Let's take a look at their numbers and a bit of analysis. Jumai Mohammed is is an equity analyst with Exotic Partners based here in Lagos. Jumai, thank you very much for coming through on Skype.
Thanks for having me.
We appreciate that. Okay, what's your general view on the cement sector's stock towards in Nigeria? Of course, we have two main rivals. Looks like these two big folks have almost crowded others out of the business.
Right. Before we go through the outlook for the cement companies, I think it's important to understand where we've come from. 2016 was a distinctively weak year for Nigeria and producers alike. We had issues around economic growth, weak fiscal position, devaluation of the currency, low gas supply to the country as big drivers of economic performance. The larger players, such as Dangote Cement, however, were able to navigate the system a bit better than the others. This was simply because of their ability to sort of withstand some of the pressures a bit better, given their scale, a regional foothold, which allows them to support the dollar supply in Nigeria with the cash flows from international operations. Now, putting that in context, and by the same virtue, what you would expect to see in 2017, especially now that we haven't seen much of an improvement from the challenges last year, and I mean, barring any decisive fiscal policy going forward, would be that the stronger players will continue to perform better, and they would be our preferred option in the environment. So as the companies take on the full impact of the devaluation, and also, you know, just generally weaker performance in economic-wise, of course, with the exception of, you know, a low base benefit, given that 2016 was significantly weak. We don't think we're going to see much of a real growth momentum in 2017. The better performance, again, would be the larger and more resilient players like Dangote.
Yes, but again, crunch the numbers for the two companies for us. Of course, both of them have a bit of a SWOT, as it were, the weaknesses, the opportunities, and the strengths, as it were. We've talked to the side of the Dangote Cement. Look at Lafarge, for example. The prevailing downside risks are still there. Do you think this cement giant with extensive footprints, even not just in Nigeria, but also across Africa, is still vulnerable to some of the issues that it had in recent times?
Right. To put into perspective, Lafarge is actually slightly more vulnerable to foreign exchange and price movement, that's cement selling price movements, than Dangote is. So as you can imagine, they're more at risk in this environment, given that, I mean, their bottom line is significantly diminished, as we saw in 2016, where they were recording significant losses. We don't think much of that is going to change into 2017. Also, to add the fact that they're in a relatively weaker competitive positioning, Unfortunately, due to the lack of flexibility on production to sort of move to more efficient plants than a player like Dangote would be, what I would expect to see in 2017 would be further pressure on the company. But again, as I said earlier, you have to bear in mind that 2016 was a low base for Lafarge Africa. So, of course, they would have to recover from that, although we might not see a real growth momentum. And consumer, or rather investor sentiment might remain weak around the stock price.
So in other words, if I'm making a buy, a hold, or a sell decision, if I'm making any of those decisions on these two stocks, you think, what's the horizon for them against the other?
Right. So what I would say is we currently have a buy on Dangote. Again, just a quick recap, it's more resilient, it's more proactive in its cost management, and its non-Nigerian businesses stand to sort of support relatively weaker performance in Nigeria. On that basis, we think Dangote would be a top pick. And also to add the fact that on a net basis, they benefit from further devaluation of the currency. On the other side is Lafarge. We think that there's still a lot of downside risk to be priced into the stock, but we don't see the stock going much lower than this. Hence the reason why we have it on a hold. It's been significantly pressured. The negatives have been significantly priced in. So I would say buy Dangote and hold Lafarge.
Okay. Either ways, I've got to hold on to something. Thanks for holding on to us on the show today. We appreciate that.
Sure.
Jumai Mohammed,
equity
analyst at Exotic Partners, sitting here in Lagos. Let's stick with West Africa, where Ghana's new government of President Nana Akufo-Addo plans to review its $918 million program with the International Monetary Fund because the country may need more money for its spending plans. The three-year program, signed by the previous administration in April last year, or 2015, I beg your pardon, imposes strict targets for revenue collection and spending. The government aims to reduce inflation, the public debt, and the budget deficit, and restore rapid growth to West Africa's arguably second largest economy. President Nana Akufo-Addo won December's election in part by promising voters that he will give the equivalent of $1 million each to each in constituency per year for development, build a dam in every village and a factory in every district while cutting taxes. Meantime, Ghana's central bank is likely to cut its benchmark interest rate for a second straight meeting after consumer prices rose at the slowest pace since July 2014, and those decisions out of Ghana's central bank will be out later today. Okay, well, thank you everyone for watching. I am Bosun Numafaya. I will see you again very soon. Do have a great time, and we're live to you from Lagos.